Welcome to Coin Vantage. Today we're delving into Robert Kiyosaki's insights onto finance and economic shifts. Our team is here to break down these perspectives, explore resilient assets, and guide you through strategies for a more secure financial future. Let's dive in. Robert Kiyosaki sees this moment in history as completely unprecedented. He's really worried, describing it as possibly the scariest and riskiest period ever, comparing it to a stock market crisis in England a century ago that had limited global impact. He stresses that today, stumble in the US economy could cause a ripple effect worldwide. While Kiyosaki usually knows how to profit from chaos, he's genuinely worried about how regular folks might suffer. He fears a global depression could be looming. He predicts a lot of negativity and a slow, tough road to recovery, but he believes that those who prepared well, like the folks listening to him, stand a better chance. He's gained some credibility in foreseeing market crashes, having called Lehman Brothers collapse 6 months before the 2008 recession hit. Kiyosaki's concern extends beyond the financial. He's worried about how unaware many people, especially Americans, seem compared to the genuine anxiety he feels while traveling globally. He really emphasizes the emotional toll this could take, especially on parents fretting over their kids' well-being. Kiyosaki questions the value of the US dollar, dropping down to the point of how counterfeit currencies historically fail. He thinks it's odd how people still have money despite programs like quantitative easing and zero interest rates. Plus, he points to the recent $500 billion injection into the repo market, suggesting it's a sign of relying on fake assets and misinformation. "Who Stole My Pension" by Kiyosaki echoes the main theme of Rich Dad Poor Dad, drawing from the author's own experiences watching his father's financial struggles. He reveals the scars left by his dad's poverty and contrasts the advice he got about careers with the harsh reality of unemployment, no pension, and no income. Sharing stories of friends affected by stolen pensions, he raises valid concerns about the future of 401ks in the US. In comparison to his broad perspective gained from extensive global travels, Robert Kiyosaki points out inward-looking American viewpoints can be. Reflecting on a recent trip to Argentina with his brother, he was stunned by the similarities between Argentina's situation and the potential outcomes in the US. While people do have better awareness due to the past crises over those in 2008 and 2000, Kiyosaki, while hoping to avoid catastrophe, recommends something that has personally paid off financially for him. Despite being labeled a pessimist, Kiyosaki discusses the impending slump with a contagious sense of excitement. He sees potential bargains post-crash as stimulating prospects. He emphasizes his inherent optimism, contrary to popular beliefs. His research indicates that entrepreneurs starting new ventures after a crash often find success. The collaboration between Kiyosaki and Ted Siddle, an attorney for the Securities and Exchange Commission, on Who Stole My Pension stems from Siddle's family anguish during Uganda's political turmoil and Kiyosaki's father's financial woes after a valid political bid. While not aligning with any specific political view, Kiyosaki expresses distrust in the government and asserts that presidents minimally influence his firm decisions. Real estate businesses and oil wells are assets proven to weather economic downturns, areas he encourages investing in. To counter impending economic troubles, he suggests investing in gold and silver, highlighting their stability despite currency fluctuations. Despite being accessible in investments, he notices widespread hesitancy to act, blaming societal complacency. In his book, Kiyosaki delves into the structural issues in the US, particularly regarding pensions and financial security. He criticizes societal apathy and reliance on the illusion of self-healing economic systems, to stress the importance of investing in precious metals to hedge against a declining dollar. He draws parallels to Warren Buffett's strategies. Moreover, he highlights the contrast between the obsession with stock market highs and ignorance about the looming debt crisis and the significant role played by the repo market. He underscores the correlation between these aspects. Despite society's fixation on stock market peaks, he points out that pensioners, their families, and taxpayers bore the brunt of the pension crisis. In essence, Kiyosaki's recommendations revolve around safeguarding assets resistant to economic downturns and advocating investments in gold and silver. He attributes widespread cultural inertia and misplaced trust in established financial systems as reasons for people's reluctance to heed his advice. Thanks for delving into these insights from Robert Kiyosaki's viewpoints with us. If you're eager to stay ahead in economic landscapes and explore diverse investment strategies, check out Coin Vantage. On our channel, we're a team passionate about decoding complexities of financial markets, discussing resilient asset options like precious metals, and navigating economic shifts to help you make informed decisions. Stay tuned for more discussions, analyses, and strategies from our team to empower your financial journey. Thanks for tuning in today, and we will catch you on the next one.